Hello everyone. Let's start our paper today. We have our 16th set of paper. LCCI Financial Accounting Level 3. July year 2018. Okay, again 100 marks, 5 compulsory questions. Okay, let's start. Okay, so we have 4 items and then extended trial balance. Okay, this time again we need to work on the columns for statement of profit or loss. Okay, so let's see what we are asked. State 2 uses of trial balance. Okay, check the arithmetical accuracy. Okay, whether we have the total of the debit side equal to the total of the credit side, and also assess the preparation of financial statements. Okay, because once the trial balance have been prepared, we will use the figure for the preparation of the statement of profit and loss and statement of financial position. Okay, and then we have to calculate the inventory value, given to us, the draft inventory value, provisional one and the revised one, and the depreciation charge for motor vehicle, bank loan interest, and then we will put in the extended trial balance. Daily provided the following information. The following had not been adjusted for. Closing inventory did not include again. Okay, in these few sets of paper we can see many times, it's not to adjust the item, but then 2 or more items are not included, and we have to see how much should be added to it. Product 1, A1 quantity, and then cost price, selling price. Each unit can be sold for 8.1 after repairs costing 2.5. So our net realizable value 5.6. What happened? 5.6. That means no adjustment needed, because there is no impairment. There's no impairment, but then it is not included in the inventory, so we have to find the original cost 120 plus multiply by 5.4, that is 648. B2, 610 quantity and then cost price, and then selling price 13 after repairs costing 4.1. The 13, 4.1, yes, 8.9 is the amount that should be included. Multiplied by 8.9, 5429. So these two amounts, 648 and 5429. Here 648, 5429. The value will be 44997. And then this amount should be put in the statement, in the extended trial balance. You can see here, statement of financial position debit, statement of profit and loss credit. LV3 Okay, next one. On the 1st of September, a motor vehicle costing 16,000 was purchased using an 8% bank loan. Interest is paid annually on the 31st of August. Okay, our year end is on the 31st of May. Okay, it is purchased on the 1st of September, so we have to count the number of months. Okay, September, October, November, December, okay, and then January, February, March, April, May. Okay, so it is 1, 2, 3, 4, 9 months. Okay, interest should be accrued for 9 months. So 16,000 multiplied by 8% multiplied by 9 months. Okay, we have interest of 960. Okay, here 960. Interest. Bank loan interest, okay, the expense 960. Other payables 960. Okay, so next. Okay, we also have the purchase of this motor vehicle that we have to deal with. Okay, motor vehicle cost, okay, at 16,000, and this is done through a 4%, 8% bank loan, repayable in year 2024. That is a long-term, non-current liability. Okay, so next, Daddy had paid 410 insurance for the motor vehicle using his own money. Okay, so insurance 410 insurance. Okay, so there is no insurance, but then there is a motor expense, so it should be included in the motor expense. So 410 expense is in the debit side. And it is paid through the private bank account. Okay, so this should be added to the equity. Okay, last one we have the depreciation. Let's look at the depreciation charge policy. 25% reducing balance method. Full year depreciation is charged in the year of acquisition. Okay, so we have to look at the updated balance. Okay, updated balance for motor vehicles 84200 plus 16,000. We have 100200. Okay, let me use brown. 100200 cost. Accumulated depreciation 36300. Okay, so 1002 minus this one. Okay, 63900, 25%, right? 15975, 25%. Okay, so depreciation charge 15975. Now here depreciation debit side 15975, and then go into the accumulated depreciation. Okay, that's it for the adjusting columns. 15975. Okay, and then we have to continue to work on the 2 columns for the statement of profit or loss. Okay, that would be easy. Okay, we just identify Okay, any item that need adjustment, that belongs to the statement of profit and loss. Okay, so not for equity, but for motor expenses, 3268 plus this one, 3678. Motor vehicle cost and accumulated depreciation, opening inventory, 38312. Other trade and other payables, bank loan interest, 960. Closing inventory for statement of financial position and for statement of profit or loss, and then depreciation. Okay, of course we don't need the this dash, okay, for those items not related. Okay, I just want to make sure that we have finished dealing with each of the lines. Okay, so 22 marks, 15 marks here in the extended trial balance, easy mark for you. Okay, second question, we have opening and closing balance, okay, and then some other items. Okay, and then we have to work on the rental income, insurance account, and the statement of financial position of Todd. Okay, that is, for me, first of all, other receivables and payables. Okay, and also sole trader, 18 marks. Okay, so rental income account, insurance account. Let me draw the forms, the accounts first. Okay, of course we have to adjust for, adjust for the accruals and prepayments, opening and closing balances. Okay, so let's see what is given to us for rental income as well as this insurance account. Okay, so opening bank, closing to be calculated, inventory, non-current asset carrying value, and then we have other payables for rental income, other receivables, insurance. Okay, closing balance to be calculated. Bank summary. Okay, we have drawings, general expenses, insurance, purchases, rental income, and sales. Okay, I put that in brackets because these are payments. Okay, and those without brackets are receipts. Okay, so with this we can calculate the closing bank balance first. Okay, so I have the closing balance being 5729 negative. Okay, let me check again. Sorry. Yes. Okay, insurance was paid for the 12-month period ending 31st March year 2018. Okay, so our year end is on the 28th of February, so it is paid till March. That means 1 month in arrears. Okay, let us go to insurance. 1464 is for 12 months, so 1 month would be 122 prepayment. Okay, so we can go back here. Okay, this is other receivables, that means prepayment 122. There were no additions of disposal of the non-current asset. Okay, so with this we can calculate rental income and also insurance. Okay, let's do this first. Okay, 810. Okay, other payables 810, other receivables 105. Rental income, it is an income account, so credit side, and then debit for insurance. Year 2017, 1st of March, we have a balance of 810. Okay, and then for insurance, balance debit 105. Okay, this is a prepayment, while this one, okay, is a payable, that is an income in advance. Okay, someone pay you first. Okay, so let's see. For rental income, we receive 10500, and then closing other payables 940. Okay, 940, and then rental income 10500. Okay, so receipts 10500. Okay, this is from the bank. Okay, year 2018, 28th of February. Okay, and then we will have the closing balance and the transfer to statement of profit or loss. Okay, so usually I would put here first, how much? 940 here. Okay, and then put it back there. Okay, so let us calculate the transfer. Okay, it would be 10370. Okay, also the same for insurance account, but then opposite. Okay, year 2018, 28th of February, we have payment in total. Okay, and then we have the transfer to the statement of profit or loss, and then the closing balance. Okay, so let us look at the figures. Payment 1464, and then the prepayment closing balance 122. 122 here. Okay, and then 1464. 1447. Okay, finished. 10 marks. Okay, not difficult. These are level 2 stuffs. Okay, so calculate the bank balance. Okay, we have calculated already. Just copy the figure, and then the profit or loss for the year ended 28th of February. Okay, that we need calculation. So 5729 negative. Let us put the amount first. Okay, 5729 negative. Okay, overdraft. Profit or loss. Okay, let us look at what is given to us. Okay, so we have no change in inventory. So purchases, yes, purchases will be equal to the cost of sales. Okay, non-current asset, we have 10300 as depreciation. Okay, so sales 60,000, cost of sales 40,000. Okay, we have gross profit of 20,000. Other income we have just calculated to be 1447. Okay, and then this is insurance. Okay, rental income 10370, 10370, and then expenses 1447, 10300 for depreciation. General expenses 8000. Okay, nothing else. 147, 19747 for expenses. Okay, 10623 for the profit. 10623. Okay, next we have to give the equity and liability section of the statement of financial position. Okay, so here we have 2 columns enough. Okay, I'll make it 3. Okay, opening equity we can calculate from the opening balances. Okay, bank inventory and then all this. Okay, and then payables is debit. Okay, 1935, 10,000, 90300 minus 810 plus 105. Okay, 101530. Okay, being the opening balance. $101530. Okay, let me write the 101530. Okay, equity, opening balance, and profit. Do we have any drawings? Let me check. Yes. Less drawings, and then we have closing balance. Okay, after that we have liabilities, first of all, do we have long-term liabilities? No. Okay, I thought we have. Okay, but we don't. Okay, because in the previous question we have long-term liabilities, but not this one. So let's make it 2 columns. Okay, if that is the case, we only have 2 items of liabilities. Okay, that is, okay, we have trade and other payables, and also bank overdraft. Okay, so profit we have calculated to be 10623, and then drawings 28700, 28700. Okay, closing balance, okay, being 83453. Okay, bank overdraft 5729, and then we have trade and other payables. Okay, trade and other payables being 940. Nothing else. Yes. 9, oops, sorry. 940. 5729 6669. Okay, and then 83453. Okay, this is total equity and liabilities. Okay, done. 18 marks for question 2. Okay, so next one we have partnership. Again, okay, we have in some previous question. And Bull were in partnership, sharing profit and losses equally. Okay, given to you the opening balances of capital and current account. Okay, so on the 1st of July, Cho joined the partnership. Okay, April, May, June, and then July, that is 3 months. Joined the partnership by introducing 70,000 by check. Non-current assets were revalued and the profit on revaluation given to you directly, okay, 21,000. Okay, the original partners are sharing profit and losses equally. Goodwill, okay, 40,000, not to be maintained in the books. The new partnership agreement provided for profit and losses shared between An, Bu, and Cho in the ratio of 5 to 3 to 2. Interest on capital to be paid 8% per annum on the opening balances of An and Bu, and the capital introduced by Cho. Bu to receive an annual salary of 15,000. Okay, but only for 9 months. The profit was 108. Profit accrued evenly throughout the year. Okay, so we have to state 2 advantages of operating as a sole trader compared, okay, or faster decision making. Okay, and also keep all profit. Okay, do not need to share the profit with others. Okay, and if you want control of the company, you have full control of the business, right? Okay, so appropriation account for the 9-month period. Okay, not for the previous 3 months. Okay, calculate Bull's current account and the capital account. Okay, so let's start. Let's make it 2 columns. Okay, profit for the year, for the period, okay, will be 108, and for 9 months, okay, 81000. Hey. Okay, so we have salaries, interest on capital, as well as the share of profit. Okay, Bu is to receive salary. Okay, Okay, so I will put salaries first. Okay, 15,000 for 1 year, but then it is only for 9 months. So 11250. Okay, and then next we have interest on capital for the 3 partners. Okay, An, Bu, and Cho. 8%. Okay, so here we have for An and Bu opening capital balances, and then for Cho it is capital introduced by Cho. Okay, so 80,000, 60,000, and then 70,000. Okay, here we have to be careful. Okay, I do not like how the question is set. Okay, because for interest on capital, I think okay we should consider the capital after the formation of the partnership. Okay, but not the original amount. Okay, because the original amount is not fully adjusted. Okay, but then if the question is set like this, is given like this, of course to gain the marks we have to follow. Okay, so we will take 80,000, 60,000, and 70,000. Okay, for the preparation of the appropriation account. Okay, 8% for 9 months. Okay, so let us keep this 80,000, 60,000, 60,000, and then 70,000. Okay, and then all multiplied by 8%, and then for 9 months. Okay, so 48. And then 42. Okay, so finish. 1012600. Okay, and then we have profit available for distribution. Okay, so finish for these 6 months. Calculate Bu's current account balances. Okay, so for Bu, the opening current account is debit 1300. Okay, 1300 debit. Okay, so let us put here first 1300 debit. Okay, and then Okay, he can share the profit for the first 3 months. Okay, that would be 13500. Okay, and then the the appropriations for the second half, 11250, and then 3600, 11250, and then 3600, and then the share of profit being 17145. Okay, so these 3 things. Okay, it will be 44195. Okay, so next we have to calculate the capital account for bull. Okay, why everything is for bull? Okay, so bull capital is in the credit side, year 2017, 1st of April. Opening balance 60,000. Okay, and then let's look at the revaluation and then the capital. Okay, non-current asset, the revaluation gain is 21,000, and then the goodwill was 40,000. Okay, so here year 2000, the same year, 1st of July, I guess, right? Yes, 1st of July. Okay, we have the revaluation. Okay, revaluation gain of 10500 because we have 21,000 divided by 2. Okay, and also for the goodwill adjustment, okay, we have 40,000 goodwill, okay, shared equally. Okay, and then year 2017, the same year, okay, 1st of July, we have the goodwill written off. Okay, this time it is 3/10. Okay, 40,000, 3/10, it is 12,000 goodwill written off. Okay, so closing balance year 2018, 31st of March, the balance 60,000, 105, 20,000 minus 12,000 is equal to 78500. Okay, so it is done. Capital account of bull. Okay, so we still have some discussion questions. Okay, I thought we need to calculate the statement of financial position. Okay, but no. Sue has just started working as a trainee for the partnerships accountants. Okay. Discuss what Sue should do in each scenario. Cho's mother has asked Sue to provide details of Chu's income for the period. Okay, principle of professional ethics. Okay, of course it is confidentiality. Okay, should not provide information obtained from the jobs to, okay, I would say unauthorized third parties. Okay, because it is not that, okay, no information should be disclosed to anyone, any third party. Okay, but then there are some unauthorized third party. Okay, they do not need to know, they have no right to know about the inside information of the business. Okay, so scenario 2, Sue had been asked by Cho what he can do to minimize his tax liability. Okay, tax liability minimize. Okay, so minimizing tax liability is not a problem. Okay, it is the professional work of an accountant. Okay, just that. Okay, if you are doing this by illegal means, okay, to evade tax, okay, then there is a problem. Okay, but then simply to minimize is not that of a problem. Okay, for me, what's more problematic is that because this Sue is just a trainee, started working as a trainee. Okay, so maybe I doubt if she know how to do it. Okay, so just a trainee maybe do not have the professional knowledge or training to provide such service. Okay, should reject. Okay, or refer the case to the senior accountant or the business or the firm. Okay. Okay, for this decision, okay, I wonder if we have to write about the first scenario or not. Okay, if that is the case, okay, should not provide the information. Okay, so 20 marks for this question. Okay, so we still have 2 more questions. Let us take a look. This one is the statement of cash flows. Let's see. Yes, statement of cash flows. 10 marks for the whole thing. Okay, and then some explanation questions. And then the last part, do not keep full accounting record. Okay, single entry. And then we have evaluation of information, of financial information, prepare a statement of profit and loss. Yes, the whole thing, and then some concepts, some stakeholders, and then the evaluation of performance, 20 marks. Okay, so we will deal with these 2 questions after we come back from the break. Yes, question 4. Okay, so let's take a break. let's continue. Okay. So, statement of cash flows. Okay, we have closing balance at year end in the left hand side. Oops. Okay, so state whether the statement of cash flows, where in the statement of cash flow would the item be shown. Dividend received would be investing activities. Okay, depreciation would be operating activities in the adjustment part. Okay, prepare the plant and equipment cost account. Oops. What happened to you? Okay, so cost account is in the debit side. Let us see. Plant and equipment opening cost 686,245. Okay, and then closing 91360. Okay, we have equipment here. Equipment costing 14310 with accumulated depreciation 3640 was sold for this amount cash. There were no other disposal. Okay, so we do not have to calculate the disposal gain or loss because we are given directly the cash, net cash from operating activities. So these two, okay, we have to use it for the calculation of depreciation. Okay, depreciation is not needed as well. Okay, because we don't need to calculate operating activities. Okay, but then we have the cost. Okay, so 14310 okay is the disposal amount. Okay, let us put 14310. Let us put the opening balance first. Okay, year 2017, 1st of April, we have the balance being 86245, and then during the year, okay, we are given the exact date, okay, for the disposal. So 1st of January, okay, we have the disposal 14310. Okay, and then we do not know when we purchase the non-current asset. Okay, so let us make it 31st. Okay, bank. Okay, and then also the closing balance. Okay, this amount we need to find. Okay, so closing balance 91360. 91360. Okay, let's see one more thing. Whether there is any revaluation. Okay, I hope there is not. Okay, we have to look at here. Revaluation reserve, none. Okay, good. Okay, that means we have a purchase of 19425. Okay, and then brought down 91360, balance brought down in 2018, 1st of April. Okay, 4 marks done. Okay, 19425 is needed as the investing activities. Okay, so let us see. Cash in hand, cash at bank, no short-term investment. Okay, let us find the total. 16640 16840 negative 2905, closing balance being 2555 negative. Okay, so wow, there's a very large decrease in cash and cash equivalent, 19395. Debentures. Okay, we have repaid 15,000. Okay, and then further borrow this one. Okay, financing. This is repayment. This is borrowing. Intangible non-current asset, we have more. Okay, that means we have acquired 20,000, investing negative. Okay, plant and equipment done already, and then we have to look at the share capital. Bonus issue. A bonus issue of 65,000 ordinary shares was made. Okay. We don't have any retained earnings, but then we know for 65,000, okay, we reduce the amount from share premium and also from retained earnings, 35,000. Okay, and then an ordinary share dividend of 0.06 per share was paid. Okay, let us check. We have 180,000 plus 65,000, 245. Yes. Okay, so 245, and then multiply by 0.06. Okay, we have 14700 financing activities. Okay, done. Okay, so now we can prepare the statement of cash flows. Okay, 4740 being the net cash from operating activities. Okay, and then next part we have cash flows from investing activities. Okay, we have proceeds from disposal, then less purchase of, is it machinery, plant and equipment, and also purchase of intangible asset. Okay, so intangible, I remember it is 20,000. Purchase of plant and machinery, 19425, and then also proceeds from the sale, 8990. Okay, so we have 19425 and also 8990. 30435 negative. Net cash used in investing. Okay, next you have cash flows from financing. Less dividend paid and increase in debentures. Yes. Okay, so dividend paid 14700. Okay, and then for the debentures we have repaid 15,000 and then borrow a further 36,000. Okay, so this is 36,000 and then 15,000 negative, and then 14700 negative. Okay, giving you a net amount of 63,000. Okay, so this is net cash from financing activities. Four seven four zero 19395. This is net. This is decrease. Net decrease in cash and cash equivalent. At okay, 19395. Yes, this is what we have calculated. Okay, so we have 16840 and 2555. 16840 positive, okay, and then 2555 negative for closing. Okay, negative 19395. Okay, yes, correct. Okay, so this is for the statement of cash flows. Oops. Okay, and we have explained how the debentures are shown in the statement of financial position. Okay, so here, okay, we have this one. Okay, is this repaid or what? Or partly repaid? Yes, partly repaid. Okay, so here, 4 marks, that means we need to explain. Okay, this would be current liabilities, this would be non-current liabilities. Okay, so because it is to be repaid within 1 financial year, okay, and then this one is repaid after 1 financial year. Okay, 20 marks done. Last question would be single entry. Okay, so let's see what is given to us. Okay, this sole trader does not keep full accounting records. She provided the following information. Okay, I do not know how to pronounce the name of the owner. Anyway, okay, given to you opening and closing inventory and also other payables for general expenses. And then for the year, we have carriage in, general expenses paid, wages to be calculated, inventory turnover period, gross profit percentage margin, okay, profit for the year percentage. Okay, and then part D is not related. Okay, so general expenses first. Okay, we have opening and closing accruals. So we have to minus this one plus closing. Okay, so 18930 minus 745 plus this one 19001. Okay, wages we don't know. Carriage in is added to purchases. Okay, so see what we need to do. Okay, it's the whole statement of profit or loss. Okay, so let us take a look again. Okay, we have opening and closing inventory. We have gross profit margin, profit for the year, expenses paid, wages we don't have. Okay, but then we don't have any. Okay, inventory turnover period, good. Okay, that means we have cost of sales. If we have cost of sales, we can calculate everything. Okay, good. Okay, so I would like to change this. Okay, not single entry, but to sole trader. Okay, because for single entry we use the balances and everything to help us find. Okay, this is simply to create the statement of profit and loss. Okay, so let us start. Okay, before this, okay, let us calculate cost of sales first. Okay, so cost of sales we do not know. Okay, opening inventory, closing inventory divided by 2, and then we have inventory turnover period 21 times. Okay, this is not period but inventory turnover, the rate. Okay, 21 times. If it is period, then it is this is another formula. Okay, and represented by the length of time, maybe how many months or how many days. Okay, this is inventory turnover rate. Okay, anyway, so 21,000, 27,000 divided by 2, we have 24,000 as the average times 21. We have cost of sales being 504,000. Okay, so let us create these things first. Okay, again, I like this kind of question, putting in puzzle pieces. Okay, so we will have revenue less cost of sales opening inventory and purchases and carriage in less closing inventory. We have gross profit. Okay, and then we have 2 expenses items. Okay, less general expenses and also wages and salaries. Okay, this we have to find. Okay, this is the last item, and then we have net profit for the year. Okay, so we have opening and closing inventory 21,000, 27,000, and then cost of sales 504. 504,000 cost of sales. Opening inventory 21,000, 27,000 for closing. Okay, and then we'll use these two. Okay, gross profit margin and also profit for the year as a percentage of revenue. Okay, this time we are given the margin. Okay, that means margin is 10%. Okay, so let me write down. Okay, that means if revenue is 100%, then gross profit will be 10% of revenue, and 6% will be the profit. Okay, we do not have revenue, we do not have gross profit, but then we have cost of sales. Okay, cost of sales this time will be 90% of revenue. Okay, so if we have that amount, so 504 to be 90%, then we have 560,000 as the sales. Okay, and then 56000 and then 33600. Okay, let us check if 33600 is equal to 6% of revenue. Yes, it is. Okay, so now let us fill in the two remaining items. Okay, from the question. Carriage in 820, and then general expenses 19001. Okay, so carriage in 820, general expenses 19001. Okay, so with cost of sales, okay, we can find purchases being 509,180. Let us calculate one more time to make sure that it is correct. Okay, 21,000 plus this one plus 820 minus 27,000. Yes. Okay, so total expenses being 22400. Okay, and then this minus general expenses 3399 for wages. Okay, done. Okay, so how many marks? This is 9 marks. Okay, so next part, explain with reference to an accounting concept why it was necessary to adjust general expenses. Okay, that is of course accrual concept. Okay, accrual concept is concerned with when expenses are incurred, not when it is paid. Okay, we should record it when it is incurred. Okay, so explain the interest of one stakeholders. Okay, again, government. Okay, to see if the correct tax is paid. Okay, or other things, employee. Okay, job security, possibility of pay rise. Okay, state two other stakeholders. Okay, employee. Okay, or bank, or supplier, or customer. Okay, last one, evaluate the performance of this company. Let us take the ratios and see. Okay, so this company from year 2017 to year 2018, okay, is there any improvement? Okay, evaluate the performance. Okay, we look at improvement or deterioration. Okay, so gross profit percentage good, net profit percentage not good. Okay, and then we have return on capital employed a little bit, I mean this one improve. Okay, deteriorated. Okay, quick ratio deteriorated. Okay, so that means overall I should conclude that there is a deterioration of the overall performance. Okay, you are able to sell your goods at a higher price, which is good. Okay, maybe this is because of marketing efforts. Okay, usually we can say like this. Okay, be careful, it is not directly related to the amount of sales. Okay, because if you keep your margin and the amount of sales increase, you have higher gross profit, but then the gross profit percentage would be unchanged. Okay, so remember, when gross profit percentage goes up, that means you are able to sell your goods at a higher price, or you are able to get your cost of sales, your purchases at a lower cost. Okay, so this is good, but then you cannot keep it because maybe you have spent too much money on marketing, or you cannot control your other expenses. Okay, you can see the gain that you have in gross profit are all spent on expenses. Okay, and overall return on capital employed, that is if you are the owner, if you are the investor, you will not be happy. Okay, the company is not gaining more money for you. Okay, and the quick ratio from 1 to 1, okay, which is a very good quick ratio, to 0.6. Okay, that means you are not able to repay your liabilities without selling your inventory. Okay, which takes time. Okay, worrying liquidity for this company. Overall speaking, okay, I think the performance has deteriorated in year 2018. Okay, so remember, for this type of evaluation, you never evaluate year 2017. You will not say, okay, you perform better in year 2017 because it is already the past. Okay, there's no use saying that. Okay, you will only say, okay, in year 2018 whether you have improved or you have a deteriorated situation. Okay, you compare this year's performance to last year, not the other way around. Okay, so that's all for today. This is our 16th set of paper, and we will continue tomorrow. Okay, tomorrow we will have June year 2018. Okay, so see you.